Good morning and welcome this morning to Trading Futures, another great webcast from Schwab Coaching. My name is Ben Watson. There's the opening bell, and that means it's time to get going here. I am joined by my good friend Michael Fairborn out there in the chat. I want to thank Michael for helping out the last couple of weeks as I've been out on the road traveling and doing live events. And welcome to all of you that are here with us this morning. Mike's going to be out there in the chat helping to answer your questions. And it's bound to be an interesting morning as we have the opening of the FOMC this morning. That May meeting may mean changes, probably not, but we'll see what that looks like, and we'll see how that is influencing the market. This morning, we're going to talk a little bit about maybe potentially a flight to safety on the part of investors kind of across the economy. So we'll see what that looks like. And we'll take a look at one of the hedging positions that we have on our sample portfolio in this discussion. So a couple of quick reminders, those we get started here. Remember that everything that we talk about is simply for illustrative and educational purposes only. It is not a recommendation of any particular strategy or symbol or idea or account type. Remember that futures and futures options trading involves substantial risk. It is not suitable for all investors. Make sure that you read the risk disclosure statement for futures and options prior to trading futures products. Recognize that futures trading requires separate trading authorization. Remember that futures accounts aren't protected by the SIPC. Now, that being said, futures being a leveraged product require an initial margin to enter the position, and then they require a maintenance margin to continue to hold that position. Those margins are subject to change and are based on certain circumstances, and those can and do change on a regular basis. Now, that being said, a couple of things to keep in mind as we go into this discussion. We're going to be using the Thinkorswim desktop software platform today, specifically the paper money version of that. It is not a guarantee of what might happen out there in the future, and it is a great learning environment. However, recognize that some aspects of the paper money platform are a little bit different than the live trading platform, specifically things like studies and scans and so forth might be a little bit different. Now, make sure that you understand if you're going to trade something like a currency future or a virtual currency future, that there are going to be influences on that, on the value of that contract, that might be subject to other forces, right? So if it's a virtual currency, those virtual currencies may not be backed by actual value, may not have legal tender status, those types of things. So keep those things in mind. Make sure that you're aware of those characteristics. Remember that virtual currency derivatives trading involves unique and significant risk. Make sure that you are aware of the NFA Investor Advisory on virtual currencies and the CFTC advisory on virtual currencies before you think about and consider trading any of those strategies. We're going to use technical analysis here. Technical analysis is not the only method of analyzing the market. There are others: fundamental analysis, probability analysis. All of them are theoretical in nature. None of them are guarantees. So make sure that you're aware of the fact that Schwab doesn't recommend the use of technical analysis or really any one method of analyzing the market as the sole means of investment research. Now, when we talk about stop orders, which we will in this discussion, when we talk about managing positions and managing risk, remember that stop orders on a futures product, a futures contract, don't work the same as a stop order on an equity. When we issue a stop market order, that market order then becomes or is worked as an exchange designated limit order based on that exchange's protection points or protection ranges. So if you create a stop market order, understand that there is the potential for that order not to be filled if that price moves, especially in a fast moving market, outside of that exchange designated limit range or protection range. So we'll see what that looks like as we get into this discussion, but it's something to be aware of. We need to pay attention to as we get into this discussion. So here's where we're going to go. We're going to talk about what's going on in the futures market right now. We're going to talk about some specific asset classes And then we're going to look at some example trades. So I'm going to do this really quickly here. I'm going to shift over to the Thinkorswim desktop software platform. Again, welcome to all of you. For those of you that are just joining us and you're joining us in the live version, we're glad you're here. If you're joining us in the recorded version, thank you for being here in the recorded version. You've got the chat function here. You've also got the comment function in the recorded platform as well. So the other thing I'm going to do as we switch over here to the platform is ask you to simply click on that subscribe button down at the bottom of the page if you have not done so already. It is a great way to stay connected to our overall content. It's a great way to keep track of new content that comes out, and it's the cheapest subscription you will find. It is at no cost to you. So you can find that there at the bottom right-hand corner to stay connected to our Trader Talks webcast page. So let's take a look at what's going on in the major index futures this morning, just to kind of get a sense of what is happening this morning. S&P 500 E-mini futures in the last 3 or 4 sessions have broken back up through the 50-period simple moving average, approaching that 200-period simple moving average, which may be kind of that bullish-bearish toggle for some institutional investors. We're not quite there yet. And in fact, in the last couple of days, ahead of this FOMC meeting, ahead of some uncertainty, certainly the uncertainty of tariffs overall, the uncertainty of the impact or changes from the Federal Reserve, maybe perhaps to their statement, to the language that they use, a little bit of selling off of this pretty strong run that we've seen over the course of the last 1, 2, 3, 4, 5, 6, 7 sessions. Now seeing a little bit of backing off. Nevertheless, testing the 50-period simple moving average from above, now testing it down on the bottom side. RSI is still strong. The RSI is still breaking above previous highs. So the last time that the market was up here, so we've got a little bit of, I would argue, a hidden bullish divergence. I'm just going to draw some lines. There's that diagonal downtrend line, but look at where the RSI is, in fact, during that same time frame, if we were looking at equivalent highs. So higher high on price, lower high on RSI, lower high on price, higher high on the RSI. That's a hidden bullish divergence in the context of what's going on here. Now, does that mean that price is going to reverse and move higher? Does that mean that the overall the bulls are going to step in? Well, it could be, right? But again, we're kind of clouded with all of the overall uncertainty that's going on in the market. So watch. One of the things that it seems investors are watching at this particular point is this 50-period simple moving average on the /ES, and that diagonal trend line, which is arbitrarily drawn, might in fact be up here at this 200-period simple moving average as potentially a level of resistance. And then overhead, we've got the resistance around the 5,800 mark, which has been a pretty strong, if we go back and look left to confirm what's going on over here, resistance, support, resistance, could potentially be resistance again, and kind of falling within that range. The NASDAQ, on the other hand, maybe looks a little flatter when it comes to kind of that resistance area after touching and testing. And this is exactly what I was just talking about on the ES. Breaking out of the 50 or the 50-period simple moving average, coming up and testing the 200, which is right about that resistance area, that horizontal resistance area, in this case around the 2,492, 2,500 mark, and then coming back down, moving down towards the 50, but it's not there yet, so a little bit stronger. But again, the same kind of hidden, although maybe a little bit weaker hidden divergence going on here at that on the RSI versus the NASDAQ, right? So trader asks the question, could have been the 200-period moving average as a sort of target? 100%. Yeah, I mean, again, when you see some of those areas kind of repeat themselves, when you see price action changing direction at a significant level, whether it's the 200-period, and we've seen it, look, one time here, we saw it back here, tested it as support, tested it as support. And then we see it testing it as resistance, testing it as resistance. that then becomes kind of that technical toggle point, right? If price breaks above that 200 period, that could be potentially a pretty bullish signal in terms of upward movement. We're not quite there yet. I mean, it's tested it. It's come back down from it again ahead of the FOMC meeting. That's going to be one of those concerns. And again, the NASDAQ or the Russell 2000 here kind of giving us that bigger bullish divergence on the RSI, breaking above the 50, coming back down below the 50 right now. So weaker, at least from a trend perspective at this point, stronger perhaps and more consistent in terms of the run off of the lows, stronger bullish divergence, but remember divergences don't equal trend. They simply signal the potential thereof. Now, I wanted to answer one particular question that came up, and I noticed this coming up in the chat and comments while Michael Fairborn, my good friend out there in the chat, 20-plus year veteran of the financial markets, was teaching this class for me the last couple of weeks. And that was, how do I go about doing fundamental research on the futures market? So I wanted to address that particular question pretty quickly. Then we'll take a look at putting a trade on here and getting into this discussion. So I am on the Charles Schwab website, schwab.com, and I'm under the trade tab and I'm under the futures tab. Now, once I've gotten to the futures tab here on the schwab.com website, now I've got some information about the futures market. Now, I'm going to say this. Much of this information that's here available on the schwab.com website under the futures market tab, or the futures market overview subtab and some of the other research subtabs, is provided by third-party providers. Recognize that third-party providers are the providers of that information. Their information that they provide may or may not reflect the opinion and the expectations and the understanding of the Charles Schwab company. And so from that standpoint, that third-party information is and comes from those third-party providers, and they are solely responsible for that information. This chart happens to come from the CME Group, which is one of the futures exchanges out there. And so we can kind of see in a kind of heat map view what's going on in the market. And so this can be a nice way to do kind of an inter-market relationship between different futures products. You can see right now energy products seem to be somewhat on the rise over the course of the last trading period. Equities moving down, which is consistent with what we were just looking at on the chart. Interest rates kind of neutral at the moment. Metals definitely seeing some strength here. We're going to take a look here really quickly. And as we look back over here on the FX side, this is the currency side. We're going to take a look at the currency side here as well. You can see some of those currency markets on the move. The yen, for instance, the British pound, for instance. And that kind of goes back to the premise that I mentioned at the beginning of the discussion, which was maybe there's a little bit of a flight to safety moving into this area. Now, I wanted to show you a couple of other things right here on this sub-tab under the futures market data. And again, I'm going to repeat my discussion of third-party data providers. So I'm going to click on that tab right there, and I'm not even going to open any of these. I'm just simply going to show you some of those reports and pieces of information that are available that might allow a trader of futures to do fundamental research on the futures market. So things like the Commitment of Traders report, which comes from the CFTC, natural gas reports, we get energy stocks reports. We've talked about those in terms of the economic calendar. You get technical summaries, you get fundamental discussions of the market. So for doing fundamental research of the futures markets, this may be a place where a trader could gain some additional fundamental information to do some of that research. Now, primarily what we're going to be doing in this discussion, though, is surrounding technical analysis on those markets, but I wanted to make sure that we had a good understanding of where some of this additional information is available here on schwab.com. So hopefully that's helpful for those of you that want to learn a little bit more about what's going on in the futures market. And I know Michael Fairborn talks quite a bit about this in his Wednesday afternoon market and sector analysis webcast. And I'll let Michael put the link to that webcast out there in the chat. So let's pop back over here to the Thinkorswim desktop software platform and let's take a look. So I kind of put some ideas together here in terms of this flight to safety concept, right? So the flight to safety means generally, and again, that's why I have it in quotes there in my scratch pad, that flight to safety perspective is the idea that when there is uncertainty in the market, when there is uncertainty in equities, that investors move to areas that have purportedly, supposedly, expectedly intrinsic value, right? Things like gold, things like gold-backed or other currencies, and things that are backed by ostensibly the full faith and credit of the U.S. government, right? So those are some of those flight to safety areas. So we're going to talk about these for just a second. We're going to take a look at a couple of examples. Where I want to go first is into the metals market, the precious metals market. Several of you had talked a little bit about that this morning in the chat. So I'm going to bring over here my single grid, and we'll take a look at what's going on in the metals market. So let's go to /GC and see what's happening here this morning. We're going to see that gold, this is the large gold contract. We can see that in terms of the notional value, $339,960 in notional value in one contract. This is a big contract, but we can see what's been going on from a technical analysis perspective in this gold futures market. We've seen in the course of the last few trading sessions a little bit of a pullback to a support level and a bit of a rally. So if we were looking at this from a technical analysis, simply a technical analysis perspective, we might be looking for something like a little bit of a bull flag going on here. And we have that close above the high of the low day. We have that diagonal trend line breakout. So some traders might be looking for a continued, especially going into the FOMC meeting, a continued move higher. And this is simply technical analysis. And we've got a webcast that talks about trading price patterns. Barb Armstrong teaches that. And all I'm doing here is I'm taking the measurement objective or the measured move of this bull flag, and I'm taking it down here to the support level, and I'm putting it up here. That would put this target, this flag target for the gold contract somewhere up here around 3782, 3800, which would be a substantially higher price than where it is now. But we've had a couple of very strong momentum candles coming up off of that support. So some traders may attenuate that distance somewhat and maybe look for this to move back up to some recent highs. That recent high simply being the top of that flagpole in this bull flag pattern. So for technically driven traders and technically driven futures traders, this type of setup may suppose that move back up to a resistance level. It doesn't guarantee it by any means, but we've got a couple of things going on here. We've got higher highs in the RSI, and excuse me, excuse me. We've got an ADX, that directional indicator line, as a trend strength indicator above the 28 mark. In fact, above the 25 mark. 25 being kind of the toggle point. I'm going to just draw this in here about that 25 point. When that ADX gets above the 25, that oftentimes can be a signal of a pretty strong trend, a stronger trend than when that ADX line is below the 25 level. That's kind of how the ADX works. It's kind of a trend strength gauge, either to the downside or to the upside. Well, generally our price movement has been moving to the upside. We can see that as price has been coming down, and remember, this is going to lag a little bit. The ADX is going to lag like the RSI lags just a little bit. But as this ADX has been coming down a little bit into that 28 range, that's reflective of this downward trend in the bull flag weakening a little bit as it gets to a support level. Okay, so that, as we start to see that move higher, has the potential as we see this staying higher on the ADX to indicate some move to the upside, right? Okay, so let's ask a couple of questions here, and let's kind of answer a question. Dan asks a question, or Dan asks a question, is this futures label right here, is that a native study on the Thinkorswim platform? Is that something that is ThinkScripted? By the way, you happen to have Mr. ThinkScript, Michael Fairborn, out here in the chat. This is a ThinkScript study that James Boyd and I have kind of adapted and written here. I'm going to just do this. It is in the description for today's webcast, but I'm going to share it with you as well. Here it is right here. You can change the label color. That was the adaptation that I added to it, but I'm going to go ahead and I'm going to share this with you. Now, one thing to note is that any shared item, and I'll just put this out here in the chat, any shared item is not guaranteed as to time or accuracy, and it is for illustrative purposes only. So there's the label there at the top of the chart, and I've just labeled it, I've just put it here on the chart. I've got it on a number of these charts, but you'll see it, it'll show the tick size, the tick value, the point value, and it will show the notional value of the contract. So here we are in gold. Let's kind of go back down here to this perspective, and let's pop into our futures movers grid, which has our short-term time frame and our long-term time frame in place here. So here's our short-term time frame. On the right-hand side, here's our long-term time frame. That 1 year daily chart, we see those kind of echoing lines here. So the idea is we're getting a little bit of a bounce here this morning up above this 33.95 mark. Rally up, pull back into that support level, rally up. These are 5-minute candles, and looking for potentially a little bit of a breakout of that resistance there up to that target, in this case up around the 34.40, I'm going to call it 34.45 range right there. And then we'll talk about those ag products, Carol. So hang tight for just a second and I'll get to that. So here's going to be my target to the upside is right here, right around 34.40. And we're going to look at taking this trade off if gold moves back down against us, kind of that symmetrical distance. You can kind of see that symmetrical nature, the pull back into the support, the rally and the breakout to the resistance level. So we're looking for a breakout here above this 34.05, 34.06 level as an entry signal. You can see that the momentum is kind of waning just a little bit here as we start to get into the cash market. But that's going to be the entry trigger here to see that move to the upside. All right, so let's put this trade together. I'm going to zoom in. I've already kind of squished that in there. So we're going to zoom in and we're going to put this trade together. Now remember, stops on futures work a little bit differently than they do on equities. They get worked as a limit order. So if you issue a stop limit order, that's going to be okay. I mean, that's going to work the way a limit order works. But if you issue a stop market order, once that market order becomes a marketable order, once it's triggered and it goes to the exchange, it's not going to be worked as a market order. It's going to be worked as an exchange designated limit order within a protection range. If you have a fast moving market and that market moves outside of that protection range, then there is the potential for that order not to get filled. So it's something that we want to pay attention to in this circumstance. So what I'm going to do is I'm going to create this order right here. We're going to use this as a buy stop trigger. So I'm going to go to 34.06 in this case. Now remember, we're using the smaller contract, the micro contract here. That micro contract, if we look at our contract specifications, $34,000 in notional value as opposed to $344,000 in notional value. Tick size still the same. Tick value is a tenth. Point value is a tenth. So you see the difference in size in terms of that notional value of the contract. That being the case, our initial margin in the trade is going to be lower as well. So I'm going to right click right here at 34. We're going to call it 34.06. And I'm just going to level that out at 34.06. What I'm going to do is I'm going to buy this as a buy custom with OCO bracket. Now remember, there is a circumstance potentially where a bracket order in a futures market could get triggered on both sides of that bracket order, or both sides of that OCO order, before the market has a chance to cancel the other side of the transaction, especially in a fast-moving market. So, properly warned, DB, says I, in this particular case, because you know that that is the potential for something like that to happen. So what I'm going to do is I'm going to make this 3406 even as our entry, and we're going to make that not a limit order, because if I were to put it in as a limit order, it's going to fill right now. I'm going to make this as a buy stop. Now, this is a buy stop market. So this is going to say stop, don't do anything until price gets to 3406. Then submit a marketable order to buy. But remember, a market order going to the exchange is going to get worked as a limit order. So I could make this as a buy stop limit. I'm going to just do this the way that it is right now, simply because I want to illustrate that idea. And I'm going to make this, in fact, a day order. I'm going to keep this as a day order because things could certainly change between today and tomorrow, and I don't want to deal with potentially the impact of that on a trade that maybe hasn't filled yet. Now, the next side of this trade is going to be the upside, and I'm going to look right up here at about 34.44. I'm going to use 34.44 as my upside limit order. And that upside limit order is going to be the point at which I want to take this trade off. That's getting back up to this resistance level and back up to the top of that bull flagpole, not going out to the extension, right? Because that might not get hit. We may see this roll back against us if something changes in the language from the FOMC and there's no longer a flight to safety perspective. So I'm going to make that one good till canceled. That's going to be the limit order to the upside. Now, a limit order is going to get worked as a limit order, right? It's going to fill at that price or better. That's what limit says to the exchange. The other side of this equation is going to be down here at this 33.80. I'm going to call it 33.82 in this case. And that's going to be our downside. So we're going to say, let's take this trade off at 33.82. And I'm going to leave that as a stop market, again, because I know that the exchange is going to work that as an exchange designated limit order based on their protection point. There is the possibility that this could get gapped around, but there's always the possibility that I could get gapped around if I put this out as a stop limit order here in the order entry page. So you just have to be aware of that a stop market would fill you at the next available price. But the exchange doesn't want that to happen because that next available price could be significantly lower or significantly higher in terms of getting in, especially if there's a fast-moving market. So I'm going to make this good till canceled so that it matches our limit order on the upside. And we're going to put this order in and let this order work. So I'm going to go ahead and click on confirm and send. I can see the buying power impact. That's my initial margin in this trade. That's the initial cost that I have to put up, or cash that I have to put up to initiate this futures order, and we're looking for upside potential movement here. So I'm going to put this in my futures group so that we can come back and we can look at it on a regular basis if it does work for us, because it doesn't necessarily mean, even though I've put this in as a day order, that if it fills today that it's going to hit either one of those two exit orders, either to the upside or to the downside today. It could, especially if there's a fast-moving market or there's kind of language or expectation coming out of that FOMC meeting. So I'm going to send that order off. It's not going to fill until that trigger hits. That trigger is right here at the 34.06 level. So that's where we were looking for that potential move to the upside. Now, the other ideas within this context of flight to safety are currencies that maybe you're seeing some influences higher because of foreign investors selling US dollars. So what I'm going to do is I'm going to come back over here to my futures movers grid, and I'm going to look through, I'm going to go to my little drop down arrow right here and go to the futures list, and I'm going to look and see those currencies that might have some impact from dollars. And one of those might be, and might be in fact kind of part of that flight to safety. One of those might be the British pound. One of those also might be the Swiss franc. So we've got futures contracts that trade both of those. We've also got smaller futures contracts that trade the spot currency in the FX market. So there's a difference in terms of the size. So let's take a look, first of all, at the Swiss franc, and let's see what's going on with the Swiss franc. And we can kind of see, once again, in that longer term chart, a very strong move to the upside over the course of the last month. A little bit of a pullback kind of into this bull flag pattern. And we can kind of see that happening here this morning as we zoom in. Big rally up, a little bit of a pullback, and now maybe finding a bit of a support level and starting perhaps to bounce and gain some strength. So some flight into the Swiss franc in this particular case. But if we maximize our sell, we can see the size of the notional value of this particular contract. So let's take a look and see if there's a smaller contract that we could use. I'm going to scroll down through this list, and here's what I'm going to do. Well, I don't have a, there we go. I do have a micro Swiss franc /MSF. Okay. So I'm going to click on that, and we can see the size of the notional value goes down. Same type of influence here. So tick value, tick size, the same, point value smaller, but that notional value smaller than the large contract. So we're going to use that just in terms of maximizing our capital efficiency. Now, the problem is this is perhaps a little less liquid, and you can see some of those gaps here that are happening in terms of that liquidity range. So I'm going to look at this making a relatively small move to the upside, perhaps up into this resistance level right around the 1.227 range. And you can see where we are right now. We're right about at that 1.22. So I'm going to look for this move up to about there, and we're going to look at taking this trade off if price moves below this fairly narrow range down here around 1.216. So that's going to be the bottom side of this trade. We're looking for an entry on a breakout of this resistance right here at about 1.221, and we're looking to trade it back here. So that's a little bit better than 1 to 1. It's maybe 1 to 1.5 to 1. We could bring that in that level. In fact, I think I'm going to do that. I'm going to activate that drawing. I'm going to bring this resistance level up off of this low right here, kind of in this 1.217 level, and that'll shift that risk to reward perspective just a little bit on this particular trade. So we're going to look at trading this as a function of a flight to safety with that potential move higher here. Once again, it started to break. It hasn't yet broken, so we're going to do the same thing. Right-click, buy custom with OCO bracket, and that's going to be right here. We're going to create that order, and it's not letting me do that. So let's see if we can do this in this particular contract. We might not be able to do this. Some contracts won't allow that OCO bracket order. So let's see if we can build this and then put that protective position on there. Let's go to the trade tab in this particular case, and we can put this order on and see if we can get that trade to work. So what I'm going to do is I'm going to come over here and I'm going to right-click on our ask price, and let's see if we can buy custom. There we go. Now with OCO bracket, it wouldn't let us do it from the chart, but now we're going to buy it with that custom order. Now that I've got it down here in the order entry box, now I can come, never mind, that's the ES. I don't have those links. Sorry, guys. I got your hopes up for no reason. /MSF. Let's come back over here. /MSF. It might not let us do that bracket order in this particular case. I should have noticed. Yeah. And buy custom. It's not letting us do that. Oh. Huh. Okay. Interesting. Not letting us trade that. So let's go back and let's see if there is a trade that we can trade in that contract. That may just be, let's do this. I know we were looking also at the British pound. Let's look at the British pound contract here. And this is going to be /. Thanks for following along with me. And this is one of those things where, hey, sometimes the best laid plans work and sometimes they don't. So now we're starting to see this short-term movement, maybe a little bit of retracement from this level. I don't like this setup from this perspective, from a technical analysis perspective, nearly as much, although we are getting a little bit of a bounce here up off of that support level. So we might be looking for that bounce move higher instead of the break lower, but same kind of perspective, looking for this move back up to that previous resistance level. Let's see if we can put this trade together. We've got that resistance up here around 1.34. That's off of the daily chart. That's kind of completing this kind of inverted V bottom type of pattern. So looking for this bounce higher, and then I'm going to look at taking this trade off relatively quickly if it goes below this 1.36 mark. Okay. So that's where we're going to put this trade together. We're going to look for this move to up to that 1.34 resistance level. I should have known on that other one. Boy, that's what you get for doing this early in the morning. Again, my thanks to Michael Fairborn for helping out this morning and for helping to answer all of those questions. He does a phenomenal job with this webcast and with everything that he teaches. So if you want to follow some of his stuff, he's got some great content. I'm going to put this trigger in right above this high of this candle, this big green candle in the last 20 minutes or so, just kind of give me some evidence of upward movement. That's going to be our trigger. So I'm going to right click off of that, and we're going to do a buy custom with OCO bracket. Our target to the upside is going to be at 134.36. Our exit to the downside is going to be at 133.67. And and there goes our gold contract trade that opened up for us. That's what we wanted to have happen there in that particular case. Again, not a recommendation, just simply an illustrative example. So we're going to use it 133.96 as our buy stop order here this morning to get into this trade. That would give us evidence of a bounce higher. Now, our limit order to the upside, again, we're going to leave that as a limit order, 134.36. We're going to put that in right here. And we're going to go 1.3436. And we're going to make that good till canceled. We just got kicked out of something. That might have been on my other platform. And then we're going to use this exit down here at the 1.36, 1.3367. 1.3367 is our downside exit. 1.3367 is our downside. We're going to leave that as a stop market because we know that that will get worked as an exchange generated limit order. Make sure that we're aware of the characteristics here. We're going to go ahead and click on confirm and send, read through the order. Our initial margin in this particular trade, because this is a micro contract, that initial margin is going to be $242. And then we know that our maintenance margin will be a little bit less than that. So I'm going to put this in our futures group. We're going to click on send, and we're going to fire that order off, and it hasn't filled yet in this particular case. TM, because some of those quotes and some of those positions come from different exchanges and may not be available to trade on a particular platform. So we're starting to see that little bit of a bounce here. So I want to do one other thing. I want to come back over here to our futures grid. And I want to come back to that single grid because Carol had asked me a question. And I think this is an interesting question. So Carol had asked me the question regarding some of the ag contracts here. So I'm going to come down here to soybean meal. And soybean meal, this is an interesting one. And the question is, well, why aren't some of the Asian countries importing our ag products like soy meal, right? And soy mash. And one of the reasons is retaliation against the tariff implications. And that's one of the reasons why these soy meal futures have been kind of coalescing right down here in this lower portion of their range over the course of this last year. Soy meal, because China, because some of those Asian countries are some of the largest pork producers in the world, if not the largest pork producers, and some of the largest pork markets in the world, they import soy meal and soy mash as feed for that pork. They don't have the agricultural capacity, in fact, even with the great capacity that they have, to supply all of those needs. That's the fundamental theory behind this, right? If you want more information about this, hit James Boyd up on X, at James Boyd CS. His family is in the pork business, the pork industry, and he knows all about this. But that may be one of the reasons why we're not seeing this export. So they are importing from other countries that also produce soy meal and soybeans, but not as much from the U.S., and that's why we're not seeing the stronger prices here really quickly. And there's some other reasons, right? EU countries may not import some of the products that we have. I wanted to look at a couple of quick moves here, and that is /CL. Let's take a look at what's going on with crude oil at the moment. Starting to see a little bit of a bounce, despite the fact that crude oil prices themselves and crude oil supplies, and we will get the EIA report tomorrow on inventories and imports and exports. But crude oil seeing maybe a little bit of a technical bounce off of a support level down here around the 55 mark, and a pretty good bounce to the upside today. The question is, can it break back up above this range? Can it overcome kind of this overall supply overhang and gain some strength? That would be supportive of the equity futures, because about 18 to 20% of the S&P 500 is energy and energy related. So if we see energy and crude starting to pick up a little bit, that's going to lift some components of the S&P 500. So the other thing that I wanted to look at here really quickly is what's going on with yield futures /10Y. So yields are back up, which means that bonds, if we look at /ZN, which is the 10-year note, this is the other side, bond prices are going down a little bit. This is the one kind of kink in that flight to safety perspective. Although you look at the last couple of candles here on the /ZN, the 10-year note futures, kind of seeing some equilibrium candles here. So this is kind of a wait and see mode ahead of the FOMC meeting to see where that is going to play itself out. Now, one last thing I wanted to do here really quickly is I wanted to come over here to our portfolio that we have, our sample portfolio in this particular case. And we went short 3 /MES contracts a couple of weeks ago to hedge downside movement. What that ultimately ended up doing, because I left this sitting here, is it attenuated, even the face of those upward movements, it attenuated the performance of this particular portfolio, meaning those 3 contracts lost value. That offset any gains that we made in these individual stock positions. So we may have been overhedged, but I told you, and I made mention of the fact that that is a risk in hedging with futures, is the possibility of overhedging. So I'm going to go back to the chart here really quickly, and I'm going to go to /ES, and we're going to see what's going on with /ES. Maybe starting to see a little bit of pickup here, and again, that possible bounce to the upside. So what I'm going to do is I'm going to come back here to our market, or to our monitor tab. The last thing we're going to do here before we go is I'm going to peel some of this hedge back off a little bit. So I'm going to create a closing order to buy back not all 3 of those. I'm going to buy back 2 of those contracts and leave 1 in place. And you'll see the reduction in this hedge. Again, I'm going to read through the order, make sure that I'm aware of that. Click on send. We'll fire that order off. Closing that position. And we closed 2 of those contracts that we were short. And let's see what that does then to our delta sensitivity. It means now that this portfolio is more bullishly sensitive, less delta neutral than it was before. So by peeling 2 of those contracts back, closing them down, we've reduced some of that drag on possible upward movement. But the other side of that coin, if we see a downward movement in the S&P 500, this isn't going to offset as much of potential loss in these individual stock positions. So again, if you want to learn more about futures, if you want to learn more about research, you can come over here to the schwab.com and then go to the futures research page. If you want to learn more about webcasts, come over here to Trader Talk Webcasts on YouTube, and you can search for any of those topics. My thanks to, Mo asked a question. This is where you're going to find it in that playlist. Just type in the word futures and you're going to see all of those futures webcasts that talk a little bit about futures basics. You're going to see some that are designed to be that basic futures discussion. So my thanks also to Michael Fairborn for helping out today, to our great production staff for bringing us to this point and for helping us to get this information out to everybody, and our great staff behind the scenes, Mindy and Nikki and everybody else that helps out. Thanks to Michael Fairborn. Thanks to all of you for being here. We will see you guys again back here next Tuesday to talk more about futures. We'll see you then. Take care, everybody. Bye-bye.